Navigating the dynamic landscape of SoFi stock requires a discerning eye and a focus on the core metrics that define its trajectory. As of this moment, the ticker symbol SOFI stands at approximately 26.14, reflecting a modest intraday gain. This small upward movement, while seemingly insignificant, is a snapshot of the larger narrative at play, a narrative of a company on a determined path to profitability and market dominance. To truly understand SoFi, one must look beyond the daily fluctuations and consider the foundational pillars of its business model. SoFi is not a traditional bank. It is a financial services powerhouse, a fintech disruptor built on a three-pronged strategy: a lending business, a technology platform, and a financial services product suite. This diversification is key to its resilience and long-term potential. The lending engine, fueling growth and profitability. SoFi's roots are in its lending business, specifically student loan refinancing. However, its evolution has been a masterclass in adaptation. The company has successfully expanded into personal loans and home loans, creating a powerful engine for revenue generation. This segment has been a key driver of SoFi's recent financial outperformance. The latest quarterly report showcased this strength unequivocally. Adjusted net revenue saw a significant jump driven by robust loan originations. This isn't just a matter of increasing volume, it's about the quality of the business. The company's unique, data-driven approach to underwriting allows it to effectively manage risk while reaching a broader customer base. The technology platform, the invisible backbone. Behind the scenes, SoFi's technology platform Galileo is a formidable asset. Galileo provides the infrastructure for other financial institutions and fintechs, enabling them to launch and manage their own digital financial products. This B2B, business-to-business segment, provides a consistent, high-margin revenue stream that is less susceptible to the cyclical nature of the lending market. In the most recent quarter, this segment demonstrated impressive growth. The revenue from the technology platform increased substantially, underscoring its value and the growing demand for SoFi's underlying infrastructure. This is a crucial element for long-term investors, as it provides a ballast against market volatility and a clear path to scalable, high-margin growth. The financial services suite, the member ecosystem. SoFi's financial services products are designed to create a member-centric ecosystem. From checking and savings accounts to credit cards and investment platforms, SoFi is building a one-stop shop for its customers' financial lives. This strategy is not just about convenience. It's about fostering loyalty and increasing customer lifetime value. The latest updates confirm the success of this strategy. SoFi reported a record addition of new members, bringing its total to over 11 million. This growth is a testament to the platform's appeal and the effectiveness of its cross-selling initiatives. The more products a member uses, the more data SoFi gathers, which in turn improves its underwriting and personalization capabilities, creating a powerful flywheel effect. The path to profitability. A milestone achieved. One of the most significant and recent developments for SoFi has been its consistent reporting of GAAP profitability. After years of investment and strategic build-out, the company has turned a corner, demonstrating its ability to generate a positive net income. This is a critical milestone that validates the business model and attracts a new class of institutional investors who prioritize profitability. In the most recent quarter, SoFi's net income was a positive surprise, significantly beating analyst expectations. This performance, coupled with the company's raised guidance for the full year, suggests that the profitability trend is not a one-off event, but a sustainable reality. The market's reaction, while not always a straight line, has been largely positive as investors digest this new reality. Analyst sentiment and price targets. The professional analyst community has a mixed, yet increasingly bullish view on SoFi. While many still maintain a hold rating, citing the company's valuation as a point of caution, a number of key firms have recently upgraded their ratings and raised their price targets. The consensus price target has been trending upward, reflecting a growing confidence in SoFi's ability to execute on its strategy. For a stock like SoFi, which has seen significant appreciation over the past year, it is not uncommon to see a hold rating even from analysts who are impressed with the company's performance. The rationale often centers on the idea that much of the good news is already priced in. However, the consistent upward revisions to price targets from firms like Citi and Mizuho are a strong signal that the market may still be underestimating SoFi's long-term potential. The recent tiny drop, a professional perspective. Let's address the minor fluctuation you've observed, a tiny drop in the stock's price. In the world of high-growth stocks, such movements are not just normal, they are expected. It is crucial for investors to understand the difference between a fundamental shift and a momentary ebb. From a professional standpoint, a small dip in a stock that has been on a strong upward trajectory is often nothing more than natural market behavior. It could be profit-taking by short-term traders, a broader sector-wide movement, or a reaction to a minor news event that has no bearing on the company's long-term fundamentals. As a wise investor, you should not be swayed by these transient fluctuations. Instead, focus on the core thesis. Is SoFi still executing on its three-pronged strategy? Are its revenues and profitability trends intact? Is the company's member growth continuing? The answer to all these questions, based on the most recent data, is a resounding yes. The company's fundamentals remain strong, and its strategic path is clear. This minor downturn, viewed through a professional lens, is simply market noise, an opportunity for long-term investors to add to their position at a slightly more favorable price. Forward-looking outlook. What to watch next? Looking ahead, the next earnings report will be a critical event. Investors will be scrutinizing two key areas: the continued growth of the lending business and, most importantly, the margin expansion and profitability. The market wants to see that SoFi can not only maintain its momentum, but also translate that growth into even more robust profitability. Furthermore, keep a close watch on any new product announcements or partnerships. SoFi's ability to innovate and expand its ecosystem is a central part of its growth story. A recent partnership with Lightspark to power blockchain-enabled international money transfers is a perfect example of the company's forward-thinking approach. Finally, pay attention to the broader economic environment. As a financial services company, SoFi is sensitive to changes in interest rates and consumer credit health. While its diversified model provides some protection, a significant shift in the macroeconomic landscape could impact its business. In conclusion, SoFi is not just a stock. It is a financial services revolution in progress. Its stock price, while an important indicator, is just one part of a much larger and compelling story. The company's unique business model, its proven ability to achieve profitability, and its relentless focus on member growth make it a compelling proposition for those with a long-term investment horizon. The recent minor dip is not a red flag, but a